Hi guys, welcome back to Trademanza's weekly series, the stock market recap. In these videos, we bring to you all the interesting events of the stock market over the last week and what one can expect from Nifty in the coming few weeks. Before we get started with today's videos, do subscribe to our channel, switch on notifications and like our video, and also download our app to try out our fun games and quizzes to make the stock market a very fun thing. Let's get started with the things we usually start with, our weekly analysis of Nifty. As we can see, Nifty had a very positive reaction to the budget, however, which it has corrected a little bit. Even after the correction, Nifty is still up 2% for the week, indicating that the market has taken the budget in somewhat of a positive note. If we take a look at the charts right now, one can say that 17,800 could act as possible resistance for the coming few weeks, whereas 17,400 and 17,200 could be support levels. So this is the range we can take away from Nifty, that is 17,200 to 17,800. Any break on either side of this can be a good up move or a good down move. If we switch to a time frame with some moving averages, we can see that Nifty tried taking support at the moving average, but it has closed just below the moving average, indicating that there could be some bearishness to come. If we switch to an hourly time frame, the chart is looking extremely bearish, as after the gap ups, there has been a big correction and now it is taking resistance at the moving average continuously and could break below 17,500 any minute. If one is to take a look at the option chain, we can see that the number of calls sold at the 17,800 levels are more than 10 times the number of puts sold, indicating a lot of bearishness at that level. And even the 17,600 levels has a lot more calls sold than the number of puts, indicating that that level is going to be a good resistance as well. Whereas if we move to the support side, we can see that the number of puts sold are the most for 17,200 and 17,300 levels, indicating that they're going to be good supports for the coming week. Moving on to some stock specific news, Sun Pharma has hit a 6-year high and it has gained 13% in the last 8 days on very strong third quarter results. The shares were trading at 900, hitting an over 6-year high on BSE after good operational performance in the December quarter. The stock of the drug maker was quoting higher for the 8th straight traveling day, rallied 13% during the period. Sun Pharma's earnings before interest, tax, and depreciation were lower than expected. However, the country's largest pharma player posted an 11% year over year rise in consolidated revenues to 9,800 crores, riding on strong growth on its key markets in India and US. And the net profit also grew 12% to 2058 crores, indicating profit margins of 25%. The board has also declared an interim dividend of rupees 7 per share. Another stock which posted stellar results was Indecent Bank. On Saturday, the company reported a consolidated net profit of 1,241 crores for the quarter ended 31st December, which is up 50% year over year as the private lender's total income rose sharply. The net profit in the third quarter of the financial year stood at rupees 830 crores. The total income for the quarter under review came in at 9,600 crores, which is a rise of 8% as compared to last year. The private bank's base 3 capital adequacy ratio was also at 18%, which is a good number, as compared to the 16% a year ago and 17% a quarter ago. Another company with stellar results is Rakesh Jhunjhunwala's one and only Titan. The jewelry and watchmaker on Thursday reported a standalone net profit of 987 crore for the December quarter, which is up 135% against a profit of 419 crores in the same quarter last year. This compares with the ET Now poll estimate of 858 crores, meaning that it has beat the estimate by almost 20%. Revenue from the sales of products came in at 9,380 crores, which is up 30% as compared to the same quarter last year. The company said that it has seen strong demand across its consumer businesses. Its jewelry division did exceedingly well, and other divisions also witnessed growth over pre pandemic levels, indicating that there is going to be extremely bullish momentum in the stock in the coming few weeks. Obviously, this video would not make any sense if we did not discuss some key highlights of the budget, so let's get down to it. Finance Minister Nirmala Sitharaman, while presenting the union budget, showed that India's economic growth in the current year is estimated to be 9.2%, which is the highest among all large economies. In 5 big infrastructure projects, the government has proposed expanding highways in the country by 25,000 kilometers, also allocating 60,000 crore rupees to the Nal Se Jal scheme, 5 river link projects across various states, an additional 48,000 crore in the PM housing scheme, and also boosting infrastructure development in the northeastern parts of India. The finance minister also announced the auction of 5G spectrum in 2022, proposed setting up 75 digital banking units in 75 districts, announced a national program for mental health, which has been worsened by the COVID 19 pandemic, and brought virtual currencies like cryptocurrency and non fungible tokens under the tax net. If we all know that now we are going to have to pay a 30% tax on cryptocurrencies, however, this is going to be applicable from 2023 onwards. In some global news, factory activity has China has contracted for the first time since COVID-19 began. China's factory activity contracted at the sharpest rate in 23 months in January, underscoring the huge economic costs from the country's zero COVID approach, as surging cases and tough containment measures weighed an output on demand. Usually, a PMI value of above 50 is considered expansion, whereas the value below 50 is considered to be a contraction. While estimates were expecting China's PMI activity to be somewhere between 50.4 to 50.9, the number has actually come at 49.1, indicating that not only is growth slowing down, but there is actually a contraction. Moving on to European news, the Bank of England has hiked interest rates in back to back meetings for the first time since 2004. The markets had broadly expected the 25 basis point increase, which the Monetary Policy Committee voted for unanimously, which takes the main bank rate to 0.5%. It first started in December as the rates were increased to 0.25, and now the rates are at 0.5. So, guys, that's it for our this week's market recap. Stay tuned to our channel for more interesting videos such as this one.